Hey, do you know what's truly astonishing and often overlooked? No matter where you stand in your business journey, you have the opportunity and the potential to tap into the resources of financial institutions, even while considering these three factors. Number one, some of you do not have good personal credit. Number two, some of you have not generated little or to no income. Number three, some of you have not established business credit. Despite those deficiencies, I'm going to give you top 3 ways on how you can easily get the bank's money. So let's dive right into it. Now, you want to make sure you watch the video all the way to the end because I'm going to give you these 3 ways. Then I'm going to bring them all together. So no matter where you stand in your business journey, you will be able to get approved, starting with 1, moving all the way to the 3rd one, no matter where you are. It's crazy. So you definitely want to watch the whole video. All right. So let's talk about business credit. Let's unpack what is business credit. Business credit is when you leverage your brand new business or your established business, and you're going to go to other companies and you're going to open up lines of credit with those companies. So based off your business structure, based off your business credit profile, based off your business credit scores, you're going to go to other companies and say, hey, I want to open up lines of credit. It's solely predicated on your business alone. So your LLC credit worthiness is where other companies will decide to extend you a line of credit. You tracking me? So let's break down what other companies. Well, I'm referring to the Target, the Walmart, the Amazon. I think it used to be Amazon, not anymore. But the gas store card, the retail store cards, Quill, Granger, Uline, CEO Creative. You heard of these companies before, these Net 30 accounts. Office Max, Dell, Staples, gas store cards, retail store cards, right? So you heard of these companies before where it's predicated on your LLC credit worthiness by yourself in order to get lines of credit with other companies. Now, this method is very limited. Here's why. Because once you start getting these type of trade lines, these trade lines are considered vendors and supplier trade lines. Newsflash, the banks do not care about vendors or supplier trade lines. So you are establishing business credit, but you're very limited because you can't get the bank's money with this method. That's what's problematic about business credit by itself. Are you tracking me? Okay, so that's business credit where we can go to other companies and open up lines of credit. Right now, let's focus on that's one way. Stay with me. Let's focus on the second way, which is business funding. Business funding is when we leverage our brand new business or an established business, but we also going to leverage the business owner credit, aka your personal credit. Yes, PG, personal guarantee. We're going to put the two together and now we're going to go get the bank's money. Well, let's unpack that. What do I mean by the bank's money? Well, I mean business credit lines, business lines of credit, business term loans, business auto loans. These are all financial trade lines. Secure business credit cards. This is what lenders and financial institutions and creditors care about. They care about financial trade lines. So when you're building business credit, you're only building vendors and supplier trade lines. When you're doing business funding, you're building financial trade lines, which banks care about. So they're willing to extend you more credit and more, and you can go to more and different financial institutions to open up lines of credit with those banks. Now, this can be national banks, regional banks, community banks. This can be credit union, fintech companies, because it's based off financial trade lines. So you can go get an unsecured business credit card with stated income. So which means you don't have to show proof of any income. So if you state on that business credit application that you make $100,000, they are going to take your word for a why, because everything they need to see is on your personal credit profile and also it's on your business credit profile. Remember, business funding, we taking the best of both worlds. So it's not just based on our LLC credit worthiness, but it's also based on our personal credit worthiness. That's the difference between business credit and business funding. One is just based on your LLC credit worthiness, and the other one is based on your LLC credit worthiness and your personal credit. You see how that works? So this is why you have more firepower with business funding and why you can go to the banks, because you're leveraging your personal credit, which tells them everything they need to know about you being a borrower and about you being a business owner, because they can see best of both worlds. Makes sense. So business credit, business funding, number one and number two. Now we're going to transition into the third top way to get the bank's money, which is bank credit. See, bank credit is more credible in the eyes of the lender than business credit, which is the first one I told you about. Here's why. Because banks only care about two things: your willingness to pay them back and your ability to pay them back. Your willingness, I already explained to you, that's business funding. That's your personal credit. And your business credit, that's your willingness to pay them back based on, are you paying your bills on time? Based on, do you know how to manage debt? Based on your credit history. That's all considered your willingness to pay them back. Now, your ability is primarily based on your revenue. So your revenue determines that you have the ability to pay them back. Why? Because they see that you're actually making money. So now you have the ability to pay them back. Now, how do they determine that? Well, there's something that's called, there's three key components that determine bank credit. Now, I'm not going to do a deep dive into this. So if you want me to talk more about bank credit, just put in the comments, bank credit, and I'll do a whole video on bank credit by itself. But right now, I'm just going to give you a quick synopsis on what bank credit is. So there's three key components that makes up bank credit. Key component number one is your bank history. This is why I tell you guys, you're technically not in business until you open up a business checking account. I don't know how many people that I talk to, I say, hey, how long you been in business? Well, 10 years. How long you been in business on paper? Well, 5 years. How long have you have a business checking account? Oh, I haven't opened that up yet. Or I just opened up 90 days ago. Well, technically, you've only been in business for 90 days in the eye of the lender. So we have to be mindful of that. All right. So number one is when you're establishing bank credit, you need to have good bank history, meaning the longevity. How long have you had this business checking account? That's number one. Number two is your bank rating number. See, lenders determine your bank rating numbers. Now, this also broke into three components to your bank rating numbers, which I'm not going to go over on this video. Again, comment bank credit and I'll go over it. But however, this just means your bank rating number means the average amount that you have in your business checking account and the length of 3 months. Not how much you have in there currently. That's like reserves. How much have you averaged in the last 3 months? So every quarter, how much money have you averaged in your business checking account? Is that 1,000? Is that 5,000? Is that 10,000? Now you need to be, in order to have a good bank rating number, you need to be at low 5, which means you average $10,000 a month in your business checking account. Right? In the last 3 months, you averaged $10,000. Now you have a bank rating of a low 5. And I'm going to leave it at that. Now, moving on to the third key component that they check to see when it comes to your bank credit worthiness, they want to make sure that you build a relationship with banks, with other banks, or with that particular bank that you looking to get credit from. Do you have their checking account? Do you have the savings account? Do you have a business checking account? Do you have a secure business credit card? Do you have an unsecured business credit card? Do you have a merchant account? Do you have a business lines of credit? Do you have a personal line of credit with them? Do you have a mortgage with them, right? So do you have a car loan with them? So building a relationship with that financial institution can go a long way. Do you know the lending loan officer, right? Manager. So having a relationship with a financial institution goes a long way. I'm telling you, it can be the difference between you getting approved or not getting approved, between you getting this interest rate or getting this interest rate over here, right? A low one and a high one. This between you getting a higher credit limit or a low credit limit, depending on your relationship with that financial institution, can go a long way. So those are really the three main components when you building bank credit. Now, let me circle back around. Notice the first one, when we're talking about business credit, is solely on your LLC. So it doesn't involve you having any revenue, or it doesn't involve you having any good personal credit. It's off your LLC by itself, your LLC credit worthiness. That's bank credit. Number two, what I told you about was business funding. That's predicated off your personal credit and somewhat of your business credit too as well. But primarily 95% of it is based off your personal credit. That's number two. So number three is based off your revenue, bank credit. So I'm saying all this to say this. If you don't have good personal credit, you need to be building business credit. If you do have good personal credit and you don't have a solid business credit profile, then you need to go with business funding. Well, if you don't have business credit profile and you don't have good personal credit, then you have revenue, you can start with bank credit. See, no matter where you are, you can start somewhere is what I'm saying. Either you have revenue, either you have good personal credit, or you have established business credit. But you need to have the three in order to start somewhere. That's why there's no excuse on why you can't get funding. Now, here's the secret sauce. So whoever stayed with me this long, you're very lucky because now I'm going to wrap everything together. Here we go. I'm excited. Here we go. You should be too. Now, here's the thing. Going back to business credit. Remember, that's based off your LLC creditworthiness by itself. What if I told you in the beginning, I told you can't get the bank's money? That was a little white lie because there's only one financial institution that will allow you to get the bank's money with your LLC creditworthiness by itself, which is Sound Club, which is backed by Synchrony Bank. The only bank in the U.S. as of today will let you get a business credit line with them anywhere between $2,000 all the way to $21,000. An unsecured business credit card solely based off your LLC. It has nothing to do with your personal credit, nothing to do with your income. Now, I dropped a video, so I'm going to leave a video in the description. Also, I'm going to leave a video up here, one of those, where you can actually find more info on that in order to leverage your LLC by itself and go get an unsecured business master Sound Club card, which is really powerful. Then here's what you can do. So you're going to start with business credit. So no excuse. Personal credit and income is not a factor. Build up your business credit profile. Then what you're going to do. So now you turn that business credit into business funding, because once you get the bank's money, remember, that's considered business funding. So now you got two, business credit and business funding, based off that Sound Club card. Now watch how you about to get bank credit. So now you're going to liquidate. I did a video on how to liquidate credit cards. You're going to liquidate that credit card, that Sound Club card, put that into your business checking account, let that money sit for 3 months to build up bank credit. And now you're going to borrow from bank credit to get to get more money, to get another loan. Did you see what I just did? I just gave you a advanced strategy where you can start from bank credit to business funding to business credit to business funding to bank credit. I'll just tie all three in one. Now go get the bank's money. See you on the next video.